The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the February 5th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything in our power to have an extraordinary Thursday. I'll do everything I can during the next hour. And, of course, the easiest way for each of us to always do that. We are all dreamers out there. I remember one time somebody looked me straight in the face and they said, you know, you're a dreamer out there, as if that was a bad thing. Well, you know, the folks at Walt Disney, I think they coined it best. Dreamer and doer. So you should be a dreamer, because I know you are, and you should also be a doer. Remember, what's talked about is a dream. What's envisioned is exciting. Of course, what is planned becomes possible, but what's scheduled is real, and I want to thank you for scheduling your time with me here this morning. I'm here to serve you. I'm grateful for your presence. Feel free to give me a call at 877-927-6648 internationally. You can reach out to us at 727-445-1044. Remember, if you've got a question, I promise you somebody else has got that exact same question, so don't call in for me. Don't call in for them. No, actually, do call in for them. Don't call in for yourself. I know I can get this all straightened out here, because you want to perform a random act of kindness. Come on now. Perform a random act of kindness. Now, this is Tiger Financial News Network. Of course, it is Terrific Thursday. I'm Steve Rhodes. Welcome to the show. Right now, Dow is up 125 points, trading at 17,798. S&P up 15 points at 2,056. Composite up 26 points. Russell 2000 up 10 points out there. Gold's back $4. Silver back 26 cents. Light sweet crude up $2.60 as we speak right now. You've got Hospira Inc. That is a buyout, nice 35% premium. But O'Reilly Automotive, a buyout, that is up $14. Tableau Software up $12 this morning. Charter Communications up 10. WR Grace up $8. Proto Labs up 8. Amazon up 8. Intercept Pharmaceuticals up 7 to the downside. You've got Alliance Data Systems off $15. You've got Clearwater Paper down 13. You got FEI Company down 7. Gartner down $6. Green Mountain Coffee Roasters off of its session lows, down $6 and change out here. Let's go see what these markets are doing. We go take a look at the ETFs. Let's go start up with the ETF structure out here. We got the Dow Diamonds today breaking above PS Day resistance. Of course, today's not over, but it has this morning. That PS Day resistance is that descending trend line. That's the one that took place off of the highs here from December 26. If you watch us on Tiger TV, you can see the top of that descending trend line. We're just simply using 3 or more co-located opens or closes. Doesn't matter whether it's an open or a close. We're using the body of the candle because that is the essence of price. And of course, our man Peak D said, random acts of kindness are the essence of life. And I am absolutely in agreement with that. Now, where is it that the diamonds are headed to? Well, its most recent swing point out here actually takes us into the highs here from January 22nd. That high, by the way, is 178.14. 178.14. 9.5 million shares up there. You've done 1 million shares already in about 40 minutes worth of trading. I don't know how the volume is going to be at the end of the day. You know, it dropped off yesterday. Yesterday was about 6 million shares. The day before, about 7.5 million shares. But 178.14 ought to get hit. You close above 178.14, then what that really says is, you're probably headed all the way back to the swing point high from December 26 in that 180.71 level. And that's inside the Dow Diamond. So it's broken through a channel line, a version of a trend. Just needs to clear horizontal resistance out there. That's what's going on inside of the Dow Diamonds. What we also know about the Dow Diamonds out here is it's basically in full bullish mode. If you take a look at its summation index out here, that thing cracked above the zero line. It did it back here at the end of the session on February 2nd. You had some nice follow through on the 3rd. Yesterday's little doji, yesterday's little pullback, that was to be expected. Also running into resistance, you're above it. Really, the message here, no reason for the Dow to not continue to run higher. Looks like the price oscillator right now making a little bit higher high than that from February 3rd. That's always bullish out there. A lot of time left in the trading session. I can't control what's going to happen beyond 10, 11 a.m., but we can take a look at what's happened up till 10, 11 a.m. and use that information. And that there is the information. Now let's go take a look at what's going on inside the other ETF structures. Let's go take a look at the SPY, the SPY out here, trading up $1.30 right now. Volume at 21 million shares. Yesterday's volume, 134 million shares. It's headed to the same swing point out here, which was from the trading session of January 22nd. The high, 203.26, not 203.10. I don't know how that line got out there. Come on. 203.26 is likely where that is headed to. That is the little swing point from January 2nd. Let me put that line across my screen out here. There we go. 206.26. 206.26. Yeah, that's the number out here. You're trading at 205.32. You clear that. I wish we could get rid of this candle. It's uniform on everybody's trading system. It's on the Bloomberg. It's on this. It's on everything out there because there were only a few trades inside of the SPY that actually took price all the way up to the 212.97 level out there. And unfortunately, because you'd say that, hey, price is going to go head up to that area, but it really, I don't know. We're going to use, as we have to use, in my opinion, what we need to use is really the December 29th level. That's out at 208.97. You clear 206.26. PDG, pretty darn good chance that that's where price is headed to. I think price is headed back to that area anyways. That's nothing more than just simply the consolidation. The consolidation that I'm referring to, here's the top of the consolidation box. Here's in essence, the bottom of the consolidation box right around this level. So you got 198 to 208. You got a 10-point move out there. You break 208, and then you're off to 218 inside of the market. If we go take a look at we took a look at the diamonds, the SPYs. Let's go look at the Qs out here. QQQ ETF up 37 pennies, up with 5.2 million shares out here. Now the Qs are just struggling to get above this level of resistance. That's this little gap down that took place on the trading session of January 27th out here. So that's your resistance. You've also got a swing point from the day prior, but resistance right now is the price level of 103.61. You want to see what happens at 103.61. If you close above 103.61, then that resistance line, that little window that was open, will have been repaired by traders today. And then we'll just take a look at volume. The volume on its most recent swing point, which was on the 23rd, was 34 million shares. So you're going to say that 34 million shares, yesterday you were up with 34 million shares. So it can take on the energy. It doesn't have the energy versus the 45 million shares on January 27th. I say you get above resistance. I don't care whether it's with volume or not. You get above resistance, it's a change in polarity. It's above resistance. It's not there just yet. But if, in fact, the Qs are doing that, they can get above that level. No reason for it to not get back to its November 28th high out there. That's in the 106 area. And that's what's going on inside of the QQQ. If we come over and take a look at the NASDAQ itself, the NASDAQ, a larger swath than the Qs out here. The NASDAQ, it's up. This price oscillator is in that positive zone. Yesterday really came back to test the zero line. It got just through it just slightly, but it's bouncing up above that. The NASDAQ composite, the larger indice, its message is, I'm going to 48.14, 95, and nobody's going to get in my way. Now, that's the consolidation high out there. So we want to watch what happens as price gets into that level. That's on a little bit wider swath. And then there's, of course, the New York Stock Exchange. We'll come back to the NYSE in a moment because there are folks out there that want to know what's going on inside that Russell 2000, inside the IWM. So if we go take a look at the IWM, right now she's traded at 119.37, 5.2 million shares. Russell 2000 really taking on its resistance line. We're going to use this little bearish engulfing candle. That's from the trading session of January 28th. That high is 119.45. That volume there was 38 million shares. Yesterday, you were moving up into it with 28 million shares. Light in the loafers out here. Nonetheless, you got 5 million shares already, 45 minutes of trading. We'll call it 6 to 636 or so. You got enough volume to clear that area if volume can continue up at this pace. Don't any idea if it will or it won't, but the Russell 2000 2000. Strong like bull, having tested the lows out here with light volume, those lows from December 16th, formed that beautiful hammer candle out there on February 2nd. That hammer candle is a great signal from the bulls out here because he had a test of a swing point and a bullish reversal candle. Looks like the IWM, she's going to be the one, maybe she's the one that's first up into those highs from December, that area being about the 121.38 level. Of course, inside the IWM, let me actually put this on a weekly time frame out here, because the consolidation high for IWM really, well, I take that. Yeah, it's really, it's really the high of that candle session too. I was going to say it's really more likely about right here, which is the 120.58 level. But I'm going to say, and that is part of the consolidation. There's no question. But when we take a look at a weekly chart here for the IWM, and the market is always communicating to you and I. All we have to do is go out and just read. It's not reading tea leaves. It's what are bulls and bears. They have one job. When they show up for work each and every morning, they're sign builders. That's what they do. People think that they've got some other role out there. For you and I, as a technician, what they really are is sign builders. You want to learn to be able to read these signs. They're easy to learn. I teach people all the time. I teach people what would take them literally thousands of hours. You can go scour the books and read the books, and I can tell you, I can promise you that those books are not going to teach you how to trade. So who cares what it might mean or doesn't mean? You want to know what it is you're supposed to focus on in trade. That's what I did at that 7-week workshop. You can still get access to that if you'd like. Just send me an email, steve@tfnn.com. If you really want to understand how the market communicates to you on any time frame and how you can use that for your trading, then send me an email so that I can go ahead and get you signed up for that course. You can spend all kinds of money and all kinds of time, and time is one of those things. I don't know, you value time or money more. Time is, you can't get back time. Money you can get back in a heartbeat out here. Well, look, on the trading session for the week here inside the IWM at those highs, the week that began December 29th, little key reversal session up there as well. So that's significant resistance. Now, the beauty of that, and we're trading into that level right now on a weekly basis. So that had 133 million shares. And this is only Thursday morning, folks. We've got 122 million shares. So the IWM on a weekly basis is pushing into its swing point highs with what? With volume. So what does that say? That says you're going to go and test the highs out there. And those highs inside the IWM is 121.41. So the IWM does that, is able to do that. Look, I don't know what's going to happen next, but right now it's pushing into that swing point. It's not pushing lower with volume. It's pushing higher with volume. And if it takes that out, you got a $13 plus move inside the IWM, 135 points inside of the Russell 2000 index. So we want to be paying attention to, hey, as long as I'm in the weekly charts here, why don't I just go back and take a look at let's go see we're not trading, I don't think we're trading into the swing points, but let's go take a look at let's go look at the Qs out here, see if it's trading into the swing point high out here. It is not. So no telling there. So it's really the IWM. Let's take a look at the SPYs out here. I think that was the Qs I had up on my screen. What are the SPYs doing? Well, the SPYs, I'm going to use this as the swing point. That was December 22nd out there. And the SPYs are not trading in there, but the IWM is. And so that leaves us with the diamonds out here. Let me see before we go to this hard break. The diamonds, are they trading? They're not trading. They're really close. So you want to watch 178.19. Now volume is 17 million. You're pushing into it with volume, folks. Got 24 million shares already this week. Hey, we'll come back. We'll take a look at that when we get back from this break. Steve Rhodes, TFNN. Be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to break, we were just taking a look at the diamonds. So we know the IWM trading inside the weekly swing point out here. If the diamonds close tomorrow inside 178.22, it too will close inside the swing point. Now, this is the swing point that began the week of December 22nd. So that means that really benchmarking volume is pretty difficult, right? Because you had you had Christmas. You were off Christmas Day. We were Christmas. It's hard. Now, volume there's 17 million shares. You've done 24 million as we speak right now. But if you close inside that 178.22 mark, says that you want to go test the high out there at the 180.71. Hey, let's go to one of our favorite places on the planet here. Let's go to Costa Rica to our man K Rico. K Rico, how you doing this morning?
Steve, I got to relate a funny story. Yesterday I was in a meeting after listening to your morning show, and you got tongue-tied like I did in the meeting when I was trying to speak in Spanish and my brain was kicking out English. And yesterday in the show, you cracked me up when you went blah, 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 blah. I mean, that's what I'm trying to say.
Exactly. Hey, it's a great tool, and everybody likes it. You just take that index finger, and flip it on between your lips, and it breaks the pattern. So
great. I mean, I just recalled as soon as I did it in the meeting, I thought to myself, I just heard you do that, and I think that must be a normal human thing where our brain is faster than our mouth or our mouth is faster than our brain.
Oh, it is. Hey, look, in this world here, consider from the time when we grew up as kids, versus where we're at now. When we were kids, things were easy. They weren't moving as fast. So much stuff coming at us. This day and age, I mean, you take a look at all the stuff that gets thrown at us. So I think it's easy for our mind to get off track. The guy that I like the best that does that little funny thing is Lewis Black. I think he is great. At being able to, do what what I do with my lips out there. So, in any event, if you haven't caught any of his humor, you should. He's pretty funny guy.
Yes, 10-4 on that. So the reason I'm calling is, I'm a scalp trader whenever I'm in front of the computer to play with this world of day trading. My best time frame that I've learned is between 9:30 and 10:30. More than that, I'm not even around. I'm around. I'm in and out. But I used your, you talked about this morning, the U.S. dollar, Japanese yen. And wait, I made my notes. Let me double check here.
Euro Japanese yen.
Euro Japanese yen.
Yes.
And it gave me a signal this morning, and it worked perfect.
Okay, good. I like that when that's good. That's good.
Yeah.
The euro. Go ahead.
Well, I'm just going to say I'm just trying to compare the U.S. Japanese yen to the Euro Japanese yen to see which one gives me the quick reaction on the ESH5 E-minis, and then that allows me to make the trade I'm hoping successfully to make.
Okay, great. When I'm trading on the short-term time frames, I personally am not using that correlation. I'm just trading the ES based on other patterns and just let those things go. I make myself cognizant. Look, if the market's going in one direction, the Euro Japanese yen's going in the other direction, I'm cognizant of that. And it may very well, just like you pointed out, may very well work, on the short-term basis as well out there. What I look for, then the real signal is more so from the longer term trend. Is the euro Japanese yen currency pair, that cross rate pair, is it moving higher? And what's going on with regard to our markets? If our markets are also moving in that same direction, then we can really have everything in sync. And if our markets are moving lower, like the ES Mini was doing as it was making this most recent low back here at the end of January, Rico, and on my screen, I happen to have the top portion of my screen is euro yen. The middle portion is the S&P futures contract, and the bottom portion is the NASDAQ. Now, religiously for years, what I have noticed is the divergent patterns between the euro and the S&P futures contract. When there's diverging patterns, the way that the market resolves itself is in the direction of that currency pair. And that's really what happened again. And it works all the time. Rico, I wish that I could use it as a timing tool. And I hope that you have found something out there that you use as a timing tool that works, because that would be great. Because life is about, I love Picasso's quote. I don't know if you ever heard this one. One of his quotes, or at least he's recognized as being quoted by saying, good artists copy and great artists steal. And what that means to me is that great artists, they really take something from somebody else and they make it better. And so I hope that that's what you've been able to do by using that Euro Japanese yen for your short-term trade out there.
Yep.
Hey, we're going to break. You're welcome to stay on, but if not, have a great day. You're staying, okay? We're gonna go back. Hey, K Rico's making us banana nut muffins. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 124. S&P is up 14. So, K. Rico, how's everything going in Costa Rica?
Oh, good. I landed Sunday afternoon, and I've been getting everything back to normal. Well, getting back to used to how it used to be, and I've had meetings, and I'm moving along. Yeah, my heart seems to be cooperating, and life is never going to be the same. But I'm grateful to be alive, and I'm going to just keep moving on. Every day is a blessing, and I thank it.
Well, now you got all that great produce, veggies, and fruits and everything to gain access to. You got you got everything you need.
I tell you, I walk a quarter of a mile for my veggies. I walk another quarter mile for my meats and potatoes and odds and ends, and then I walk half a mile back home, or my apartment, and that's the way to live, and take buses to go to work wherever I got to go.
Yes.
I don't know. I guess I just appreciate the life of this third world.
Yeah, that's very cool. That's very cool. Hey, anything that I can assist you with? So I'm glad that you 9:30 to 10:30, a lot of activity in the markets to be able to place trades out there. And I think the Euro Japanese yen it's a great tool out there. Another great tool is the VIX index. Now, I always like to take a look at things and say, how can I look at things differently than the way others have? Is there something else there? And that's what I'm going to share with folks this coming Wednesday, a week from yesterday at the workshop that I'm going to do. Because to me, it's always about, there's we live in this age here where we have so much data that gets thrown at us. And it's really so important for each of us to go take a look at that data and find out which of the data actually works for us. That gives us a better probability in placing a trade. I don't know about you. I found the data that really screws with you is watching television, watching the boob tube, and worrying about the news and events and things like that, as opposed to just paying attention to what's going on the charts out there. And, and just be aware of those correlations.
The idea of too much data is correlated to when we were growing up. I graduated high school in June of 1967.
Yes.
I had a nice Chevrolet Impala.
Yes.
And I used to, when I took a little course on, automotive in our high school, we have automotive.
Sure.
So the basics were, okay, we'll teach you how to change the oil, change the transmission fluid, change and check the brake fluid. Oh, and how about change, your own oil filter?
Yes.
So in today's world, you need to spend $200 to get your little odds and ends fixed that we used to do ourselves, and now we can't even get to them because they're so fandangled and complicated.
Yes, they are. Yes, they are. Yes, they are. Well, hey, always great to hear from you. Thanks for checking in with us. Best of health to you out there.
Thanks.
And glad to assist any way we can. All right, my friend.
Okay, thank you. Good talking to you, man.
All right, good talking to you. Have a great day. That was K. Rico in none other than Costa Rica. Let's go to Robert in Chicago. Robert, thanks for calling. Thanks for holding. How you doing today?
Oh, I'm very good, Steve. Thanks very much. Chicago's very, very cold today.
Oh, no. Are you a native of Chicago?
Yeah, I am.
Oh, okay. Well, so then is this winter, is it any different than some of your prior winters? Have you guys gotten more snow or is it colder?
Yeah.
Or?
Yeah, we just got hit on Sunday, the Super Bowl Sunday, with 19 inches or 15 inches. But in reality, it's been a pretty mild winter. And today is 0.
Oof, that is cold. That is, it's great towns. Chicago, I grew up in Detroit. K. Rico, he grew up in Detroit as well. So, some of those great Midwestern cities have been wonderful places. But I hate the cold. I just hate it. I
don't blame you. Not going out today.
Yeah. Hey, you're looking at Northern Trust Corp, I believe. Tell me what you're doing, how I can help you.
Yeah, so it's a bank, and I was wondering what you think about it. I'm long it, and I was thinking about adding.
Okay. So, if we take a look at ticker symbol here, folks, is NTRS. And, right now, this thing has been kind of, every time it's gotten up to this level-ish, right around the $69 area, it seems to, seems like that's about it. It's been doing that since about the November timeframe. So if I just use a kind of a volume standpoint, buyers and sellers, supply and demand, November 21st, this thing was up at this level of 1.5 million shares. It was up with 678,000 in December. It was up with, probably about 400,000 or so back here in December. And yesterday it pushed up with 1.2 million shares. So I like that. It's starting to push into these levels with some volume out here. It did that during the trading session of January 22nd, did it yesterday. Today's a little bit light on volume, 158,000 shares. Is this a longer-term holding for you?
It probably won't be a longer term holding. What I own now is long term, but I'm looking for a trade.
Yeah.
Yeah.
Since you're already long this equity, this had a nice little sign of strength on January 21st out there. And that was a 3.3 million shares. The better place to add this, if you're going to add to this position, if it takes out these highs, that's one thing. But maybe on some type of retracement. Maybe $66. Maybe it's all the way back down around $64. The mere fact that you're saying that it's just a trade versus trying to build a longer term position, I would hold off at these highs where it's been repelled before in price. Your better buy on this is going to be really down at the lows in the $61 area. So from a trading perspective, until this thing breaks out above the actual highs out here from September 18th at 70.84, your better buy setup is this thing coming back to its most recent breakout, which for you, Robert, would be anywhere between 62.81 to probably 64.32, somewhere around there. So since you're already long and in this, I'm not seeing where their benefit at the moment is to add to that position. That's my take. But is there something else that your eyes have been on this? So it could. That's like a 90-second view of this. Maybe there's something else that you're looking at too.
No, your view is perfect, and I agree with you. Let me ask you this question then: if you see it go towards above 70.84, do you see how high it could go?
Oh yeah, absolutely. Your I don't know what happened here on this chart. Let me go to a different screen here to try to do this, because for some reason the tools weren't on my screen. So let me do this. I don't know what the heck happened there, but we got time, so this is good. So let me put in a symbol here. What I was going to do is give you the A to B equals CD pattern on this. Oh man, it's not on this chart. This is so weird. Well, the good news is I always have a backup plan. I know why it's not on this one. No, I don't. I'll be a son of a gun. Okay, I've got a backup plan, so give me a moment here to go to my backup plan. Let's see if this works here. Always good when you're doing a live show to have a backup plan, especially when you got a valued person like yourself calling in to ask. Okay, so now I can do the A to B equals CD pattern inside of this equity, and that's really what we're going to use to gauge, where price could go to. So in this case here, it looks like the A point is all the way down around the April 15, 2014 level. My B point is right around the September highs back in 2014, and your C point would be down around the October lows. So what that says to us, Robert, is your 1-to-1 A to B equals CD price projection on this takes you to about 73.32 to maybe 76.73. So that's the price projection that I see right now. That's on the daily chart. Let me look at the weekly chart for you. I'm going to do one other thing. I'll need to get some more data in here. So give me a moment to do that. And then while I do that, how'd you like that Super Bowl?
Oh, it was awesome. I mean, it was, I got lucky and I picked the Pats, but the fourth quarter was insane. It was just a blast.
Yes, it was. It was an amazing, I think everybody wanted it to be a good game. Right, most people that you talk to, and it turned out to be a great game. I mean, it wasn't just a good game. I think it was and now it all depends on which side of the coin you were on, right? But it was a great game. Not too many bad calls. Did you see much in the way of bad calls? I think I only saw maybe one or two that were kind of, questionable.
Yeah, from the refs, I didn't see much. I didn't have a problem with that. I just thought that the better team lost.
Yeah. Oh my gosh, I had this set up here and I just lost that. Thing. I'm sorry. I'm just having all of a sudden out here some system problems. I don't know where the heck that's coming from, but that's the way that it goes. So give me just another minute here. Let me see if I can get this weekly on the screen here for you, and
sure, absolutely.
And we'll do that. Now, anything else that you are trading out there? Anything else that you're looking at?
Yeah, as a matter of fact, I talked to Basil about shorting Whole Foods here. They're coming up with their earnings, I think, the 10th or 11th. He seems pretty positive about Whole Foods, and I've been long Whole Foods. I'm
good.
Not long now. So yeah, that's the other issue with banks. This is a bank. is the fact that the interest rates are so low. How are they making money?
Sure. Well, hey, I've got this back up on my my screen out here.
Thank you.
And so I can tell you, even longer term, potentially, if it takes out those highs from back in that September the 19th level, that even on a longer term basis, this thing 81.04. to even $88 out there. So, it's I think you're in the right trade right now from a long-term standpoint. It's just trying to find the spot to really add to it. And, as we said on the daily basis, it was, it struggled up at these levels. Whole Foods Markets, what is it? Is it WFM? Is that the ticker symbol?
Yeah. Whole Foods Market, right.
Yeah. So we take a look at Whole Foods Markets out there. Do you shop at Whole Foods yourself?
Yeah, I do, unfortunately, but it's I love the fish, I love the bread, and the coffee, and so it worked for me.
Yes, no, I hear you. So in the case of Whole Foods on a weekly chart out here, we can see the some of the things that Basil is looking at. Well, on the weekly chart, it's this week here, it's made that fourth leg to the upside. So it's probably getting towards a bit of a potentially cautious out here, as it made a higher high this week. I'd also say from a retracement, now there's no A to B equals CD pattern on the daily chart or on the weekly chart out here. Well, no short-term pattern out here. And if I take a look at retracements out here from the high, let me see what the kind of retracement. It's at the 0.68 retracement. So Whole Foods actually is kind of at a little bit of a precipice here. The 0.68 retracement looks like, Robert, was around the $54 and change area. And you're trading at 53.68 right now. It's been up to a high so far this week of 54.48. So when you're in that fourth wave count to the upside. So maybe what this is going to do is going to give you an opportunity to buy a retracement, which would be nice. I know you've, like you say, you've been in Whole Foods before, and I know we've talked about it before as well.
Yeah, and where would you buy it?
In the case of in the case of Whole Foods, I don't know that. Well, the first places that you would look would kind of be just a retracement level, and so you'd have to say 47.51 would be the first spot to look. That's your 0.382 retracement. Ideally, though, it would get you back to 43.21, and 43.21 happens to be your 0.68 retracement. If it pulls back there's nothing wrong with the equity, especially if it's pulling back with lighter volume. And the cool thing about 43.21 is that's where it broke out last time. And stocks tend to come back to their breakout areas after they complete these other patterns. So we can use the Chapman Wave from a weekly chart as one of those potential patterns out there. And the breakout was on November 6th, 27 million shares. The low was 43.37. So don't get too caught up into the gaps get filled scenario out there. Gaps are also used as great levels of support or resistance out there. So that would be the ideal spot. I don't know if it's going to get back there, but that would be the ideal spot for you.
Great. Super. Thanks so much, Steve. I appreciate it.
Hey, no problem. Thanks so much for listening. We appreciate it very much. And stay warm today in Chicago town.
Yeah, we'll do that.
All righty. That was Robert in Chicago. That was taking a look at both Northern Trust and Whole Foods Markets. And I'm going to have to figure out why a couple of my tools are missing on my charts out here. That's never a good thing because I use those tools. Maybe I can get it back now. Let me see. Can I get it back now? Does that do it? No, it does not. That is so weird. Well, you know what that requires, folks? That requires a reboot. So we're coming to this breakout here, so I'm going to go ahead and give that a shot. Right now, the Dow's up 161, S&P up 18, Composite up 34 points, Russell 2000 up 10 as well. This is TFNN. This is Steve Rhodes. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Question from the Tiger Den. If I could take a look at Twitter, TWTR. That's what we've got up on our screen right now. It's trading out at 42.04, gapped up here this morning. I don't know if you're looking at this, if you're long, you're short, whatever you might be. If we take a look at Twitter, looks like a kind of a wacky-looking stock chart out here. Now, the good news is, if there is good news for this equity, is you're down towards its, its all-time lows out here, which was back on May 7th. when it got down to a low of 29.51. You're at $42 right now. So what can we say about Twitter? Twitter's got, from just a technical standpoint, it's got some real stiff resistance inside the swing point that it's trading in right now. This thing had gapped down on October 28th with 83 million shares. It's not been able to push up into that level at all with any kind of volume. It is today taking out a swing point. That swing point is from the trading session of January 12th. There was 27 million shares. You traded 14 million already. So that says you've got the volume. You've taken out a B point of an A to B equals CD to the upside. If we take a look at what that price projection is, now I got these tools working again. So, just thank goodness for that little reboot. Never hurt. If we take a look at the A to B equals CD pattern inside this, well, it's already hit the 1-to-1. So the 1-to-1 price projection inside of Twitter was 42.40, and your high so far today is 42.47. Now you gapped up into that. When you make a D point, when you've gapped up and with volume, that typically says that you want to go higher. Where's that higher going to take you to? And the earnings, I guess, is after the close. Thanks, J&J. It would take you to the next level. What's the next level? Just like the Eagles singing the song. Take it to the limit. Well, the limit in this case here is going to be 44.58. Now, that doesn't mean that it can't get above that, but that's an area of resistance, 44.58. In order for Twitter to now totally get bullish and reverse course here, what it really needs to do, it's damage control. And the damage control is closing that huge window, the one that began on October 27th. And the low out there of that is 47.18. But as we speak right now, if it weren't earnings out here, I would tell you that Twitter is likely going to go test the 44.58 level. It's $3. It's not even. It's $2.50. Is it worth a trade or something like that? I don't know. But that's my view on Twitter. There was also some discussion about whether or not at this level here in the ES, whether this is a good spot to short the ES mini. If I take a look at the 120-minute chart here for the ES mini, it's in that seventh inning stretch candle here, but this is a 2-hour chart. This candle here doesn't finish till 12 noon, and you can't get any kind of confirmation that this actually is in that seventh wave until 2 p.m. at the earliest out there. So what we do know on the 2-hour chart out here, you're up above market profile resistance 2046. That's bullish out here. If we look at the 30-minute chart here for the ES mini, what do we know about it? It too is in that seventh inning stretch, but it's also above this level right here. So the key inside the ES mini, in my opinion, is the last area of resistance. It's now up above that level, and that is the candle session into yesterday's close, and that's at the high of 2,049.25. Old resistance could become new support out here. Doesn't mean that it has to be in the seventh wave. Alternatively, this thing could easily be in just the third of maybe 7 to come out there. So, and even on the shorter term time frame chart out here, let me go take a look at a 10 minutes. So the answer so far is I'm not seeing it. It looks like I'm out of time out here. The 10-minute chart is saying it's still got more room to run to the upside. Hey, folks, stay tuned. Our man Basil Chapman will be up next. Then we got Larry Pesavento, and we got Daryl Martin, David White, the Tom O'Brien Show, and Andy Heck to take it on home. Thanks for joining me. Have a great Thursday, folks. Look forward to seeing you tomorrow. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.